Thank you so much for joining us tonight for our industry webinar that Strata Ventures holds for everybody that is in the real estate investment world. We have an amazing partner and friend of ours, Steve Vigil of the Wealth Club, is going to be talking tonight about some really good information about private lending and basically being the bank. So we'll let you guys get settled in as you guys start coming into the webinar. Want to say hi to everybody. Mr. Charles, Mr. Rodriguez, Carlo, welcome. Terrence, Rick Bressler, always a pleasure to see you, sir. Velma, Miss Wanda Butler, good to see you again. If you guys want to go ahead in the chat, feel free to kind of tell us where you guys are visiting from. That would be great to get the information and also be able to welcome you guys in. So it's 6:31. We're going to get started right at around 6:35 with a topic and introduction. But in the meantime, we'll make sure people are starting to come on in. So Steve, how was your week, sir? Last week, obviously this
last week was great. Really, got a lot of things going on, and this week is a very busy week. And that's how we like it. Lots of we're working on deals. We do so many different things out there in the game now that is fantastic, and we've got some announcements we're going to be making towards the end of the month on some things we're changing and some new things we're doing. But it is a very packed month. I mean, I went through my schedule, and I've got like 18 events I'm doing this month, and that's in between all the work. So
very
it's
nice.
Great. It's great. I love it.
And I know tomorrow you and I have an action-packed day of working with realtors.
Yes, we do.
I love doing the Realtor Advantage training because I believe it's the next generation of the investor relationship.
Oh, I agree. I mean, it's where things are changing, and to be a part of it. And to really open the eyes of realtors to the investing world, the response that we're getting is phenomenal.
Yep.
And so, yeah, I'm looking forward tomorrow. I'm looking forward to tonight.
Yeah,
but tomorrow will be a great day as well.
Yep, absolutely. Welcome everybody that's joining us. We're seeing some new names here. We've got Brad DeGraw. Welcome, sir. Feel free to let us know where you guys are joining us from. Mr. Don Knowlton. Welcome, sir. I haven't seen you in a while. Mr. Jeff Whitaker. All right. So we got Letty Johnson. Oh, she's one of my favorite members. She's amazing. She's actually in the Austin area, and
cool.
Such a go-getter. I mean, you'll meet her one day, Steve. She's
that's great. I love
awesome.
it. I love it.
Awesome. Let's see here. I probably have some other members on here going, Diego. No, I'm just kidding. But Letty, you're awesome. All right, everybody. So as you're joining us, please feel free to get settled in. Tonight's webinar is about private lending and being the bank. We're familiar here at SVI with all our member base and our PMLs is the ability to privately lend to all of our members and also to work with any of our partner affiliates, such as Steve and his SVMC. Right?
SVSM.
FVSM for also your lending needs there. And then we also have a lot of our other lending partners, guys, because there's always a mix in real estate, and just know that you can never have enough money, right?
Never. You can never have enough money.
Yep. So we're going to go ahead and start off in just about 1 minute. We'll start the webinar because we do want to respect everybody's time. And then go ahead and then hand it off to Steve Vigil here of the Wealth Club in order to enlighten us and everything. Oriana and I will be in the background while you're speaking, Steve, and be into answering questions, and then basically seeing if there are anything that needs to go to the Q&A session for you when we do that.
Fantastic.
Right. Everybody that's joining us this evening, please settle in. We're about to get started here, and the topic starts at 6:35, which is right now. And then we'll hopefully by 7:10, if we do happen to go over, guys, just be patient and make sure you guys are ready to get some questions answered. In the Zoom, you have the Q&A section. Please put all your questions into the Q&A spot. We don't have any polls this evening. And if you have any questions that are non-specific to the topic, maybe something about the Wealth Club, something about SVI, or something that just, you wanted to throw out there, send it over to the chat. But your topic related questions, guys, let's put those all into the Q&A. And if Steve or myself, probably me, if you think I'm boring or something, just hit the leave button here at the end, and we'll see you at another time, because we do this 2 times a month. And most of all, guys, remember, this event is for you. So ask questions, right? Ask questions. I love it, Steve, when people ask questions from California participants, New York participants, from all the 4 corners of the United States, because you get to see the different perspectives of real estate.
Which
Right.
is very important, because in different parts of the country, there are different perspectives. You hit that on the nail there, definitely.
That's correct. Little quick information about SVI. We're a full service real estate investing company with what I like to call the 4 prongs of success, which are acquisition analysis, real estate services, project management services and contracting, and last but not least, funding. When you have these 4 prongs in line with the right people in that team, you're going to start to do lower risk investments. And Steve, would you agree that if you have somebody who's in as an investor, borrower, has a low risk team providing them the data, does that make you feel more comfortable as a lender lending money?
By all means, it definitely does.
Exactly. So guys, this is about us helping the community of real estate investors, new, seasoned, or just getting the ball rolling or have been in it, become a lower risk investment, guys. This is the SVI core team here. Basically, they encompass everything that is from real estate services, acquisitions, inspections. Some of the people that are here, for example, Eric Christie is one of what we like to call our resident inspector. He's not an in-house inspector. Literally, he doesn't work for SVI, but these are people that are committed to working with us and saying, I want to help your member base and anybody else. The same thing goes here with Ron Dancy in the architectural world too. And that says a lot about SVI, Steve, is that when you have people saying, I want to be a part of that, we're kind of headed in the right track and making sure we're helping everybody.
Yep, definitely.
Here, a little bit about myself. Born in Colombia, South America, moved to the US at the age of 4. It was a mortgage banker, began investing in 2012, founded the company in 2012, May of 2012, created the SVI platform between 12 and 14, because guess what? Got a ton of crazy expensive education and was licking my wounds for 2 years and fixing the problem. And then in 14, we launched the platform that is SVI now of implementation. And in 2020, COVID launched us on a national platform, because guess what? Online, right? We had classes, in-house classrooms, multiple cities, but now everything's online, and our growth now has pushed us to over 2,300 members in over 27 states. We now and have always had a motto, which is it's a win-win or we don't do it. That means everybody part of the transaction, from the stager to the appraiser to the inspector to the real estate agent to the lender, everybody has to have a beneficial outcome, which means everybody likes to work together. So that's a little bit about me. Last but not least, this is the main question I ask everybody, is what does a real estate investor do? And everybody gives me different opinions. Well, we have one definition at SVI, ladies and gentlemen, and that is an investor analyzes, acts, invests, and profits with one word in mind, and that word is risk. So at the end of the day, we're risk managers, and at the end of the day, it's all about mitigating risk and working with the right people. So with that, guys, I'm going to turn it over to our guest speaker, Steve Vigil, if you want to enlighten us and tell us a little bit about yourself, and then just let me know when you're ready. I'll disengage and put your presentation on, and let's go have some fun.
Okay, sounds good. Well, first off, Diego, StrataVentures, Oriana, thank you guys so much for having me. I love being able to educate and try and help you guys, whether you're brand new to this business or you've been doing it a long time. We think we have a lot of things we can do to help you to grow your businesses, because we've been in business for a long time and we're full-time real estate investors ourselves. So bought my first rental properties in 2002, and over the next 10 years learned how to make a lot of mistakes. because I made most of them. And you know, we bought an eight, you know, we bought five single families, we had an 8-unit, a 10-unit apartment, and like I said, just made tons and tons of mistakes. And but that's kind of, you know, even though we were getting some of the, well, we weren't getting very good education at that point because we didn't really know what was out there. Um, you know, and you know, being in corporate America, being running a company, you know, we think we're smart people sometimes, and we might be, but if we're not smart in what we're doing, it can be a disaster. And I was one of those people. So in 2012, we decided that this was really the time, after making all those mistakes, that we really needed to get some education, get some the coaching necessary to become full-time investors at some point, because we were still working in corporate America. So we head out, you know, we started out to do this. So this is when we founded our first company, SVSM Enterprises LLC. And you know, once we finally got a personal coach, I mean, things really started to change for us, and we were very blessed in having a very good coach to help us. Then, you know, over the years, you know, we took over the Wealth Club 5 years ago. The Wealth Club is in its 19th year of existence, so it's a group that's been around for a long time. And our motto has always been investors helping investors. And so we hold that true to our hearts, and that's why we're on helping tonight and talking tonight. And then we've created SVSM Capital and a whole host of other SVSM companies that do a lot of different things. And so, like I said, we've been very blessed, and we're very grateful for where we are. But we take great pride in teaching and educating others how to become real estate investors. And that's something that we really take to heart and we really love to do. So that's just a little bit about me. And, you know, I could go on, you know, for a day talking about all the different things we've done, but that's not why we're here. You're not here to hear about all the things I do. Where I'm here to help teach you guys what you might be able to do. So if you're ready to go, we can switch out, Diego, and I can share my screen here. Try to see. There we go. Where did it go? Not giving. Oh, what did I do here? Can we put that? Oh, there we go. That's not what I want to share. Where did my screen go? Let me pull this up again. Give me just a second, and I will pull.
Everybody,
we have lots of pages here, so.
And everybody that's joining us, remember in your Zoom window to share your questions in the Q&A section. We saw some come through the chat. Feel free to move those over to the Q&A.
So can you see that now?
It is there, my friend.
Oh man. Whew.
All right. So I'm gonna mute myself, sir, and then start and move into the back office.
Okay, let me see if I can get this to a full screen there. There we go. Man, you know, I am not what we would call the genius of technology. So, but guys, I want to thank everybody again for joining tonight. I'm just really glad that I can come on and give you some good education and just a little bit more about, you know, the private lending and being the bank. Over the years, you know, we've been doing this full time now for 10 plus years. And through all of the deals that we have done, I'm talking, you know, all the rehabs, a lot of our rental properties, owner finance properties, we have always raised private money. And because we've been able to raise private money, now all these years down the road, we're also in a position now where we lend money out. And the things I'm going to teach you tonight, I'm going to be talking from both sides, the borrower side and the lender side when it comes to private money. And it really stems from all the things that we have done over the years, and you know, because we started as borrowers and have worked our ways into lenders. But at the same time, we still raise tons and tons of money for all the different things that we do now. We still do rehabs, we still buy rental properties, we still do owner finance, but now we also do a lot of things besides that. And private money has been the key to everything that we do. So with that being said, I want to get going because we're short on time and I got a lot of information I'm going to try and get to you. But please ask questions. I love to be able to answer your questions because I want to help you out and put you in the best place that you can be as real estate investors. So as always, for this type of a presentation, I have to give my little quick disclaimer. This is education. This is going to be based on my own personal experiences. I'm not going to be giving you any legal advice, any financial advice. For any of that, I always urge that you talk to your real estate attorneys, you talk to your accountants, your CPAs, to make sure that you are getting the right information for whatever your situation is. We all do different things, and all of our situations and deals are different. So it's important that you reach out to these individuals. Everything that I'm going to be teaching you tonight and talking about is based on all the things that we have done. So when I teach, it's important for me to tell you that, I'm going to teach you how I've done it and what I do. But like I said, we're all different. So take what I'm teaching you and put it into your situation, into your lives, into your deals, and then see how it will work for you. And then what is really, really important to me is before we ever do any kind of real estate investing, whether we're the borrower, whether we're the lender, it doesn't matter. We always have to make sure that we do our due diligence. This is key. And the reason I point this out so much is because all the early years that we started in real estate and investing, I was the world's worst at doing due diligence. I didn't even know what it really meant. And I made lots of mistakes because of it. So that's why I urge you to do your due diligence. If you don't know how to do your due diligence, that's what people like Diego's here for. That's what we do. We help our students, we help our members, we help all of our friends and colleagues with their due diligence to make sure we're doing the best deals possible. So just want to throw that out there, and we'll get going here now. So there's a lot of myths about real estate investing, and I always like to kind of touch on this because this is something that I have lots of people come to me, and all the time I'm hearing, well, the only way to be a real estate investor is to fix and flip houses. And of course, if we're watching TV, that's all we ever see. And, we got to go, get our hands dirty. We got to go buy materials. We got to go deal with contractors. And yes, fixing and flipping houses is one part of real estate investing. And that is a very important part. In the 10 plus years we have been in real estate, we have fixed and flipped somewhere between 700 and 800 houses. We have flipped a lot of houses. So I know this side of it very well, but there's so much more to it that we're going to go into tonight. And then the other thing I hear is we want to be passive investors. So how do you be passive investors? If you're listening to the gurus, they're going to say, go buy rental properties. It's mailbox money. We hear that all the time. Well, I'm here to tell you from someone who owns a lot of rental properties and has owned a whole lot more than we own right now, rental properties are not mailbox money. It's a lot of work. There's a lot to it. We have to deal with our tenants. The toilets, the mid calls at midnight. Now, in the early years, yes, I had to deal with that. Now I have a manager. I don't deal with any of that. It's great. But in the beginning, if we're getting into this, we're going to have to deal with these things. So just want to point this out that this is a myth, that this is the only thing we can do to become real estate investors. There's so much more. And we're going to talk about private money from the borrower side and from the lender side tonight. So I hope you're going to get a lot out of it. So let's just kind of go over it really quick so I make sure everybody understands and knows what private mortgage lending is, because it's really kind of funny that a lot of people really kind of have a misconception of this just because they don't know. And I was very much in the same situation when I got started. But private mortgage lending is non-bank real estate lending. So with that, we can borrow money to purchase the property. We can borrow money to refinance properties, do our construction, and do our rehab. And I have done every one of these categories with my private lenders over the years. Very, very different type of underwriting that we're doing when we're dealing with private lenders. When we're dealing with banks or more conventional type of lenders, they have a very strict, rigid underwriting process that we have to follow. When we're dealing with private lenders, whether you're the private lender or you're the borrower, it's a very different process. And I'm going to talk about that more as we get going in this, but this is really important that we understand this. Now, typical rates for private lending, and these are the rates that I pay. Now, this could be different depending on what city or town you're in. This could be different for a variety of reasons. But typically we pay between 5 and 10% interest to our private lenders. Now, depending on if we're doing short-term private lending, if we're doing long-term private lending. As a lender, I'll get into some more detail about that and give you actually an example of some fix and flip loans of how we would look at that a little bit more as we get going in this. Assets are backed. We have a security protected by the asset that we are borrowing against in the situation, and that's a very comforting thing. If you're the borrower, you've got that asset to back that loan. And like I said, I'm going to go in. These are just kind of some overviews I'm giving you. We're going to go into a lot more detail here in a minute. And loans offer a predictable return on their money. So when we are setting our terms up and dealing with our private lenders, whether we're the borrower or the lender, we can determine all this stuff prior to ever getting into a deal. But this is basically how private mortgage lending works. And I just always want to throw that out there. And I actually talk to a lot of people that don't have any idea about this. And I also talk to a lot of realtors and teach. We got a class tomorrow teaching realtors, and realtors don't understand this at all. So I just think it's important that we point these few little things out before we get into it, so everybody has a very good idea. Most of you guys probably already know, but if you don't, now you've got a little bit better idea of what we're talking about. So who typically loans their money? This is a question I get all the time, because people are always asking me, well, how do you know if there's a private lender out there? What do we look for? We're going to go into that. I'm going to point things out to you of how I've always looked at it and how I've always approached it. And hopefully this will help you open your eyes. If nothing else, just open your eyes to the possibilities of who may be a potential private lender. And then if we need to go into more conversation after the fact, we can certainly do that. But typically, business owners that have a lot of money sitting in the bank. And I don't know if you know any business owners. I happen to know quite a few. And if you've got a profitable business, we tend to get money just sitting there in the bank that's not working for us to make returns on it. And a lot of times with business owners, the mindset I always hear is, well, I might need to have that money there because I might need to use it if something happens with the business. And there is some truth to that, but there's still typically a lot of additional money or extra money just sitting there. And if you can teach them and show them what you're doing, it might be a good possibility for you. And if you want to lend your money, it might be an avenue where you can pull money from to do that. Private individuals want to get involved in real estate. We hear that all the time. HGTV and all TV shows have shown the popularity of getting involved in real estate. And private individuals can get involved in lending their money. Private individuals that are retired. We have a whole host of lenders that we work with that are retired. And now, depending on if they're retired, might depend on the type of deals we put them into. But we've got some wonderful, wonderful people we work with that are retired, and we just keep that money working all the time for them, and it's fantastic. And then private investors that are looking to put their money to work. We're investors ourselves. So not only do we raise a lot of money, but we also put money to work as well. That's why we do lending. That's why we do funds. That's why we do mortgage notes, because we want our money working for us as well. So just some avenues of the typical type of person to look for when it comes to raising private money or lending your money. Who typically wants to lend their money? Like I said, business owners that have money sitting in the bank, individuals that may have money sitting in the bank earning a very, very low return. We were meeting with one of our bankers, I guess it was probably, a month or two ago. And because we do work with banks too. And we were going over some stuff and he's like, man, I've got some great new products coming out that we can put your money to work for. And this is fantastic returns on it. And I said, well, what have you got to offer? And the best he could offer me was 1.6%. And I just had to say, thank you for offering that, but I can do a whole lot better with the things that I know and do now. So, people are earning low interest rates want to get that money working as best that they can. And this could be an avenue if you've got money sitting there, or if you're trying to look for people or know people that have money sitting there. It works on both sides, and that's what I'm going to go both ways through this whole presentation, because it works both ways. It's just how we look at it and what side of the fence we're on. Investors looking to put their money to work and get a better return. That's what we do. We always use other people's money, but we have our money out on the streets doing a lot of other things as well, because I want to be getting the best returns I can on my money. And then, I'm sure a lot of but individuals that have IRAs and 401ks, phenomenal place to find and raise money. And we're here in Houston, and we have a wonderful third-party administrator that we do a lot of work for, Quest Trust Company. We've brought a lot of people over to them, and it's all IRA, 401k money. And they're strictly an administrator. They can't tell you how to invest or do any of that. But we work with a lot of their clients, and we're clients of theirs as well, because this is retirement money. So if it's an IRA and it's a Roth account, guess what? All your earnings are tax-free. You don't pay taxes on that. You pay taxes on what you put in. So there's some great avenues for all of us out there. So I suggest that we look at that and check that stuff out too. Let me get a quick drink here. So why would you want to be a private mortgage lender? This is a question I get all the time. And as a private mortgage lender, we have more control over our investments. We are the underwriters. Like I mentioned earlier, when we are a private mortgage lender, everything changes compared to the conventional ways of raising money. And us as a private lender being the underwriter, we get to negotiate face to face with our borrowers. And if you're on the borrower side, you're just on the borrower side. You get to negotiate what your terms are, what your interest rates are. I mean, it changes the whole game, because we're dealing one-on-one with people. It's fantastic. We get to earn above average returns on our investments. Like we had talked about, if you want to jump into the stock market, it's pretty volatile. I mean, I don't play in that circle. I want to know what I'm doing. I like having more control over what I'm doing. If we have our money in the stock market, 401k, other people are controlling all that money, and we're just sitting there with our fingers crossed, and we're basing our returns on hope. And that's just not a position that I personally want to be in. So this has been a fantastic avenue for us because of that. Like I had mentioned earlier, your investments are backed by a hard asset. So if you're lending money on a single family home, on an apartment complex, it could be anything in real estate. It depends. You want to sit in the proper position. And, like I have here, you want to be sure that you're sitting in a first lien holder position. And that way you control, if something goes bad, you're going to at least get the asset back, and then we can decide what needs to happen with that asset after the fact. Very, very important to do. And one of the things that we do, and we've always done because of who we are, is we always give personal guarantees on everything that we do from the lending side. Now, if we talk about some of our investment stuff, by law, we can't give guarantees, but on a loan, we always give personal guarantees. And I'm always more leery of someone that doesn't want to give a personal guarantee, but I'm going to pay back my lenders no matter what happens on a deal. And we've done lots of deals. Does that mean every one of them went well? We made money on every one of them? No, we've lost money on deals. But I can promise you my lenders never lost money on a deal ever, and they never will. So this is really important for me that I point this out and talk about this to you guys, because that's a real key for me. And it also just shows your integrity and your ethics and your honesty of who you are as well.
And
So I think
Steve,
it's important to point.
let me
Go
ask
ahead.
you, let me ask you one comment here.
Sure.
Is as a private money lender, and you becoming either being a lender now or a private money lender in the future, what I love the most about it is that you get to pick your risks, your risk.
By all means.
You get to pick. Do you go to the the slot machine, or who's got the best odds? You get to pick the risk that you want to lend. You don't have to lend to anybody, but you get to pick your risk.
Well, and you make a valid point, because we can always say no.
That's correct.
And I'll talk about that a little more as we go on, because even as the borrower, I can always say no to my lender if the terms don't work with me in that situation. We have interviewed tons and tons of lenders and borrowers over the years. We don't say yes to everybody, no matter what side of the fence we're on. And as I go through this, I think you'll understand as I go through some of it when we get a little farther into this. Private lending, like I said, is asset based. So we want to know, if I'm lending, I want to know what the true ARV of the property is. I think that's very, very important. I don't want to hear, what we want it to be or what we think it's going to be. I don't necessarily listen to realtors, depending on who that realtor is, because most realtors, they're always going to shoot for the highest price, maybe not the most realistic price. So we are very good at running numbers, and we have things in place to help us run numbers if we don't know, to make sure we're getting the true ARV. That's the most important number to start any deal off for anybody. Then if we're going to be doing a fix and flip loan, then obviously having a very good scope of work is very important. And the more detail, the better. We can never have enough detail when it comes to doing a rehab. And that will also help you as far as with your contractors, when you get to the end of the job and they want to give you change orders. If it's on that scope of work, there's no change orders coming through. And contractors, for the most part, love change orders because they can charge you twice as much. And we never want to see that. And then, once we have a good scope of work, then let's get a good estimate from our contractor based on that scope of work. When someone sends that to me, I'm going to look at that, because I've done so many rehabs. I'm pretty familiar with how all that works. I can look at the scope of work. I can look at that contract, and I can know if this is a good contractor, a good bid. And if it's not, I'm going to come back and say, your scope of work, I think everything works. But the numbers you're getting right now from your contractor, we need to find another contractor. And I don't have a problem doing that, because we want to make it a winning situation for all parties. That's very, very important. We don't want to set anybody up to lose. We want to make it a winning for everybody. So guess what? We come back and do business more and more and more. That's what's fantastic about this business. So with that being said, let's go into this. Why would you want to use private money? So if you want to borrow and you want to meet private lenders, what would be your motivation for that? Well, for us, we've got a large pool of investors that we work with and have for many years. Every time we close on a deal, because I run my numbers, I know my numbers really well, I get to put money in my pocket every time I buy. And I love that. I have people ask me all the time. I have realtors ask me all the time, how much do you got to bring to closing? Well, guess what, guys? I don't bring anything to closing. They send me money when we close. I love that. And because I'm very strict on the way we borrow, I always borrow enough, because I know my numbers work. I borrow enough for my repairs and my closing costs as well. And everything is rolled right in. I bring nothing out of pocket. I'm going to say it one more time. I get money wired to my account every single time we close. It's the way to go. Fast closings, moving quickly on a deal. We can move very quickly on a deal as private lenders. If I've got clear title, We've got insurance in place. We've got all the little particulars of a deal in place. We can close extremely fast. We don't ever like to put our lenders under pressure, but we've had certain deals over the years where, guess what? We've had to close in a day, 2 days, and we can make it happen every time. Very, very wonderful. Like we had talked about, flexible terms and structure. We get to negotiate one-on-one and figure out what's going to be a winning situation for both sides. I love that. Easy approval. No income verifications. Nobody's ever asked me for income verification. I kind of like that. And no limits on the amount or the number of loans that you can do, especially if you start building a pool of private lenders around you. And obviously I'm talking from the borrower side right here, but we have got a large pool of investors that we work with, and I can have $500,000 out on the street working on projects. I can have $1 million. I can have 2 or 3 million out on the street working with different investors, because we have everything set in place. We've got structure, we've got systems in place, and we've built relationships and built that trust. And that's really, really important. And this is what makes private lending so wonderful for us from the raising capital side, but also as we build relationships as we're lending money, because when you do what you say you're going to do, it just keeps coming back to you time and time again. It's fantastic. So let's talk really quick about getting to know your borrowers. When we meet our borrowers, and this is something we started from the very beginning. So when we were the borrowers in this situation, I'm talking from the lender side, but we like to find out who we're working with. So we want to find out if our personalities align. Is this somebody that I would like to work with? Because like I said earlier, I don't say yes to everybody, whether I'm borrowing or lending. Some of these things need to line up. We need to make sure that we're on the same page. I need to know what my borrower's expectation is, and they need to know what my expectations are. It's just as important on both sides. Is this someone that I know or someone that I just met? Now, we work over and over with people, the same people, which is fantastic. At the same time, we always need to keep meeting new people. That's how business works. We retain our business that we've got and that we've developed, but we're always looking to build and bring in new business. So so we're looking at the integrity of the person. That's very, very important to me. How long has this guy or this team been in business, and how many deals have you done? And it doesn't necessarily mean that if you've done a bunch of deals that you are a good borrower, and it doesn't mean that if you haven't done any deals that you're a good or a bad borrower. We go through all these stages to try and figure that out, because we want to help everyone grow, and we want to grow as well. So just some things that are very important that we think about and we talk about. Having systems in place. Now, this is something that we started or very early on, and we kind of fell into it. It's like not like we knew at the beginning how to do any of this stuff, but I'm going to talk from how we do it when we're the borrower. We put systems in place that we felt were very important in the beginning, just by talking with our lenders and finding out what was going on. So if we decided to move forward on a deal, we're going to have we're going to have an attorney who writes up the paperwork, our promissory note, deed of trust, all that kind of stuff. And what we have to understand is, in that scenario, the attorney is working for the lender. He's not working for me as the borrower. He works for the lender. But because we've built very good relationships with our lenders, and most of our lenders, if not all of our lenders, work with all of our attorneys, we take it upon ourselves to fill out the questionnaire for our lender, because we've already gone through all those other steps that we've already talked about. And we fill that out, then we send the questionnaire to our lender to look at, read it, and approve it, and make any changes if necessary. Then when they give us the okay, then we send the questionnaire to our attorney. And that's going to, like I said, lays out all the information about the deal. Then when the attorney gets done, he sends it back to us for us to check based on the criteria. Excuse me. And then if it's good, then we send it to our lender to approve it and make sure it's good before we send it to the title company and move forward on the deal. Now, we do that because our philosophy has always been, let's make it as easy on our lenders as possible. And our lenders love us for this because all they're doing is reading and approving and signing off on it. We're doing all the legwork back and forth stuff for them. And when you build those relationships, you build them correctly, your lenders are going to love you for that. So this is something that we have always done. And I just think it's made a huge difference for us on the borrowing side. And when borrowers come to us to lend and they're doing this kind of stuff and this kind of legwork, now we have things in place at this point where a lot of that's not that big a deal. But if you want to be the borrower, little things like this will make tons and tons of difference for you, and it will benefit you tremendously. And one of the things we always have to be very aware of is that all of our paperwork is coming from an attorney. Very, very important that everything comes from an attorney. And I could tell you all kinds of nightmare stories where they didn't. So, but we don't have time for that. So some quick examples. So typical deal that we're looking at, and I still buy deals like this to this very day. We lend like this. And so, we're typical scenario, and I'm sure all of you have seen this countless times. Our ARV, $250,000. If I'm lending, I want 30% of equity in that deal. That's what's protecting me as a lender. So we're going to 70%. So it's going to give us $175,000 for our starting price. Then we go out, we have that scope of work, we have our contractor's bid, and it comes in at $50,000. So on a deal like this, we're going to lend $125,000 on that deal. Because as a lender, I've got to put protection in there for me. And as a borrower, you certainly want to have that protection in there, so you're going to make a profit at the end of it. We don't want you to lose money. We want you to make a profit at the end of the deal. So I always throw this in there. Like I said, I talk to a lot of individuals, and I teach a lot of realtors that don't understand this process. But I think it's important, even though it's very basic, it's important that we point this out because this is very, very key in many, many cases. Now, as private lenders, can we make exceptions? Can we do things different? By all means, we can. But we're going to start our evaluation the traditional way, and then based on the deal, we'll make our judgments after that. A typical loan, a typical fix and flip loan. We were doing 100% purchase price for a long time, but now we're in a really kind of crazy time out there with the economy, with interest rates. So we've kind of pulled back a little bit. We're going 90% purchase price, 100% of the rehab price is what we'll lend on. No problem. It's just a fix and flip. Very simple deal. 70% LTV. We're charging right now, 10.5, 2 points. We do look at credit because we want to, because things have gotten really crazy out there. And one of the biggest problems that we find or have found when things get crazy like this, the biggest way we could get hurt is from fraud. And so we feel that this is one of the things now that just kind of helps us tell who the person is. We like to have 20% of the rehab cost in liquid funds, 3 months of closing costs, or 3 months of payments and closing costs, because it takes money to do these rehabs. And so these are things that protect not only us, but it protects you as a borrower as well. We're on a fix and flip. We're going to do a 6-month term. We're going to give you a 3 months option to extend, because we know sometimes we have to extend just because of whatever. And, but typically we can close these deals in 3 to 5 days. If we have an appraisal, we have clear title, we have insurance on the property, boom, we can get these things done. No problem at all. Very, very easy to do. So just kind of an example of a quick fix and flip type of a deal. So how much do you need to get started? And this is something I get asked all the time, because for whatever reason, most people think that you've got to have millions and millions of dollars to be a private lender. And most borrowers think that if they're not talking to somebody that has millions and millions of dollars, they couldn't ever be a private lender for them on a deal. And that is so incorrect. The truth is that all opportunities come in all shapes and sizes. And to be quite honest with you, like I said, we have done between 700 and 800 rehabs and flips in our career. And 90% of our deals have had an ARV of $200,000 or less. So if we do our numbers on $200,000 is the ARV, I'm borrowing, 120, 100,000, 115, 130, $140,000 all the time. And you know how there's a whole lot more people out there that have money like that could lend to you. And if you have that kind of money sitting around, you have that money in your IRA, you could be lending that money out. Fantastic. As a matter of fact, I'll share a really quick little story. We just finished a job, a project, a rehab. I got the property for $60,000. We put 45 into it. So I'm into this with my lender for $105,000. We listed it today for $209. Just saying. Think about that when you're talking to people, if you want to be a borrower and you're looking for private money, you don't have to have millions. And if you want to lend money, you're in that position, you don't have to have millions. Unbelievable. So let's talk about different types of deals here. If we want to put our money into quick, fast deals, we've got fix and flip, short-term investment opportunities. In many cases, these are going to pay a little bit higher interest rate, but they're going to last a much shorter period of time. And also what we have to look at, if you're not doing your due diligence, running your numbers right, this is also going to be a much higher risk investment, not done correctly. And this is where I see most investors get hurt, both on the lending side and the borrower side, because they didn't do their numbers right in the beginning. And if you want to lend on a deal like this, it's very important that you're very cognizant of this, but got to keep in mind, once that deal is finished, you got to go find another deal. We've done this many, many times, but this is something to keep in mind. So let's look at another quick opportunity here. So what about rental properties, long-term investment opportunities? We have private lenders that lend to us on our rental properties. We have private lenders that lend to us where we create mortgage notes and sell our properties under finance. We've also got a program where we put a lot of our investors' money into mortgage notes that already exist. Unbelievable. There's so many things we can do out there. These opportunities are generally going to pay a little bit lower interest rate. However, they're a steady, longer period of time investment. And in most cases, it's a much more consistent return on our money. And if we think about the tortoise and the hare, why does the tortoise always win? Because he's got that money working consistently all the time. Very, very important to think about. It's something I'm a very big advocate of, and we do a lot of that ourselves. So now, hopefully I've given you a very wide variety and a good understanding of private mortgage lending and different things that we can do with private mortgage lending. If this is something that interests you, whether you want to be a lender, whether you want to be a borrower, continue to get more education. Continue to ask more questions and develop your skill. Find out who you are. Understand and consider your long-term investment goals over your short-term investment goals. And it will help you decide what works better for you. And then if you decide to go this way, see what works best for your exit strategy. What are the strategies you want to put in place as an investor? And you can put everything that I've talked about tonight in play, long-term, short-term, so many fantastic things that you can do. So guys, that's what I've got for you here tonight. And do you want me to put my contact page up, or do you want to put yours up?
Sure, you can go ahead and put yours up, and then I'll follow up on this end over here too.
Okay, so like I said, we do lots of different things. So we've got SVSM Capital, we've got the Wealth Club. You can check me out. I have tons and tons of videos on YouTube. And if you get really quick and you want to get a copy of my private lender roadmap book, do the QR code. And if you can't get it, then just let me know, let Diego know, and we're more than happy to get a book to you. And this will walk you through a whole lot more things that we talked about tonight. But let me unshare my screen, and if we got questions, I'd love to answer anything.
Absolutely. So let me go ahead and I'm going to share this screen here as we go into the Q&A.
Okay.
And Steve, let me know if we can show the contact information here.
Yeah, I see it. Yeah.
Yep, there we go. All right, so let's go into this Q&A session right here. All right, so let's start off with the first person here. We have Brad DeGraw said, any tips for a hard money lender whose biggest challenge is running out of capital? That's actually a good thing.
Well, if you're running out of capital and you're the lender, that is a good thing. Expanding your pool of possibilities of lenders, because everybody's going to have caps when it comes to how much money they've got or how much money they can put out on the street. For us, I don't even know how many private lenders we have, but we have a very large pool of private lenders. And so when we have a deal, depending on what kind of a deal it is, the first thing we're doing is, okay, who do we want to talk to? And every now and then one of our lenders will come back and say, all my money's out, I don't have anything. No problem, I'll get you on the next one. And we move to another lender. So it's just expanding to more and more people is how you solve that problem.
And then there's also the fact of identifying whether you are a private lender of your own capacity or you're actually taking on a hard money lender procuring private lenders.
Mm-hmm.
That's night and day, and just it's a different regulatory space there. So that's one thing to look into.
Yep, definitely.
Letty Johnson asked, if you lend out money with a promissory note, do you owe any of the assets, or in the event of default? Is it a different structure if you just want to invest versus you want to own part of the asset? How is each secured?
Okay, I'm trying to decipher that question in my head. Right. So if you're lending, there's lots of different ways to lend. You can lend as a lender. There's asset-based lending. There's a variety of different things that you can do. And then there is investing. So, we raise a lot of money to fund our deals. We also have a program with our lenders, a mortgage note program, very specific mortgage note program. And then we also have a growth fund, and they all work different based on what the laws are on those type of investments. So when you're doing a loan with someone, you do a promissory note, deed of trust, all that stuff, and then you're going to have first lien holder position, all that kind of stuff. Now that could be structured as just a loan you're paying a percentage monthly, or there could be a percentage you're paying and an equity position at the end when you sell the property. But when we're doing, let's say the growth fund, for example, that is an investment. So that has much different rules based from the SEC, who creates all those laws and rules, and we have to play a very different game over there. So I'm not sure if that answered the question, but I hope it did. And if not, let me know and we'll figure it out.
Sure. All right. Thank you, Letty, for asking that question. D. Knowlton said, what is the minimum dollar amount to become a lender?
Well, it's like I had mentioned in one of my slides, all deals come in all shapes and sizes. And I have people ask me that all the time. So depending on what we're doing, so I've bought houses for $50,000, $60,000. We've got a deal right now on a lot for $12,000. So I need $12,000. Now we've got other issues with that property, obviously, but it just depends on the size of the deal. There really is not a fixed number that you need to have dollar amount. we borrow, $2, 3, 4, $500,000 at a time. We put that much into our one of our funds. And then, like I said, the deal that we talked about, we just finished, I borrowed $60,000 to buy the property, and my rehab is 45. So that loan is $105,000. So, I had one of my lenders that I immediately called, and his question was, how fast are we closing?
Right.
And so, it's more based on the deals that are brought to you, and the people you're working with. Some people, they're, I've got a student right now, and all I'm trying to get her to think smaller because she's thinking too big, but she's having a hard time with the concept that you don't need $400,000, $500,000, $600,000 to do every deal. And like I had mentioned, most 90% of our deals over all these years have had an ARV of $200,000 and lower.
Mm-hmm.
And we've been very successful doing that. So, just do your numbers backwards off a $200,000 ARV, and you can use a 30, 40, whatever rehab cost you want. And that can kind of give you an idea. So I hope that helps you out.
Don Knowlton asked, how do you protect the money you lend?
How do we protect the money we lend? Well, we protect it by putting all the paperwork in place. And then we protect ourselves by doing the right and proper due diligence before we lend the money to you. And we base our due diligence off of our numbers, not off of what someone tells us the numbers are. So we're always going to have that layer of protection at a 70% LTV minus repairs.
Okay. Carlos Guerrero asked, my name is Carlos, and he and his business partner are starting a private lending company. Mm-hmm. One of the things that they're having issues is finding borrowers. How do you go about finding clients? Can I answer that for a second?
Go right ahead.
Okay. Social media. If you go to social media, there is everybody presenting a deal, and there's always a bunch of people tapping into the comments saying, I want to take a look at it. I want to take a look at that. That is a potential prospect. Now, obviously, each prospect needs to be vetted out, right? You have your guidelines, your matrices, and you have your regulatory, things that you need to show. But I tell people this, Steve, is if you go to any real estate mixer and grab the microphone and say, hi, my name is Diego Mello, and I'm looking for a good deal to rehab. Does anybody have a deal? Everybody's going to stay quiet. Nobody's going to talk to you. But if you walk up there and say, hi, my name is Diego Mello, I'm a private money lender, those cards are coming at you like Chinese stars, right? They're just throwing money at you. So, Carlos, network.
That's networking is very important. And you made it very clear. You've got to vet those deals, because trust me, I've got some people bringing me some crazy stuff right now. So, but we run the numbers and go, hey, that's just not going to work for us. Best of luck to you, and move on.
That's correct. You can always say no.
Yeah, you can always say no, but always be polite and friendly.
All right. Nathan Young said, when pulling money, at what point do you need to worry about being considered a trust and need to worry about syndication SEC regulations?
Well, that's a whole different ballgame. I don't do syndication. Syndication is going to be where you're pulling a lot of money. You've got a deal. And syndication is very popular in the apartment world right now. So they get an apartment, and the apartment complex is $20 million. Well, they're going to need to bring a down payment. Let's say the down payment is, $5 or $6 million. Then they have to go out and raise that from a lot of individuals. I don't play that game. I've never been a syndicator. And that I would refer you to an SEC attorney to get those parameters, because like I said earlier, I am not an attorney. With what we do with our fund, we were approved through the SEC and all that stuff, but it's very different because it's not a syndication, and it's a very different type of investment that we put our investors into. But syndication it's a whole different ball game, and that's something that we stay out of that game.
Yeah. And there's a whole other level of just preparation to make sure there's viability and risk and liability.
Right.
I was speaking to a gentleman about a syndicate author that said that his first go around for having a syndication created was a price tag almost about 65,000 at a minimum.
Oh yeah. Oh
So
yeah. Yeah.
it can get
Yeah.
expensive.
Yeah.
So Don asked, what area do you lend in?
Area, you mean areas of town or areas of states or?
Let's say states and town, I guess.
Well, we're in the greater Houston area, and we lend. We have a couple different programs we've got going right now. So we lend fix and flip short term lending to the entire greater Houston area. We can go outside of that. We can go to Texas, all through Texas. It's a different program we've got. We can also do some long term lending as well. And we can go into a few other states as well. And if you want to contact me, then we can go into more specifics about the states, because I can never remember all of them off the top of my head.
Right. I have a hard money lender directory with over 3,800 hard money lenders.
Right. Yes.
That's a lot. Yeah. Jeff Whitaker asked, the relationship you have with the attorney seems a little blurry, since it sounds like you brought the attorney. Do you welcome lenders who bring their own lending documents?
Well, for us as a lender, we're gonna take total control of that. If I may have been a little vague on that, but basically, especially in the early years, what we found as we were borrowing, a lot of our lenders used the same attorneys that we had been using, so we had that relationship, that common relationship. And so as we started doing more and more, we just started asking our lenders, but hey, if we get all that paperwork going for you, would that make it easier for you? And most of our lenders came back and said, wait, you'd go ahead and get that paperwork going? Oh yeah, we're happy to do that. Yeah. And so we had a very common relationship with our attorneys, and we've had two attorneys we've used for years, and all of our lenders know those attorneys and love them to death. So I mean, I couldn't go to another state or something like that and do that necessarily, but here in our home in the greater Houston area, we, like I said, we didn't figure it out overnight, but that's kind of how that started. Was we had the same attorneys, and so we just, hey, can we make it easier on you? How about if we get that paperwork started for you, since we already knew what the terms and the structure of the deal was, and all of our lenders always have been happy about that. So that's how that started.
All right, thanks for that answer there, Steve. Jeff also asked, who pays the fees for the custodian fee costs for lending from an IRA?
We pay all that.
Okay.
As a borrower, we pay the fees.
Got it. It makes it more attractive there.
It makes it way more attractive, way more attractive.
Jay asked, do you lend non-US citizens who own their land?
Would this be, we lend to LLCs and companies. We only do investment deals. So if it's a deal where you wanted to build your homestead, no, we could not do that.
Okay. It's about the exit, the exit strategy lending component. If it's going retail, I'm assuming that's something that they're a qualified back-end buyer. But if it's to your own homestead, you got to show somewhat of a takeout option.
Well, the rules and regulations from the federal government changed tremendously.
Yeah.
And we don't want to even get involved in any of that stuff.
All right. Brad said my smallest loan was $6,500, and he put a smiley face.
I like that.
Very good. I mean, think about it. If you made $500, your ROIs on these things are pretty wicked. So,
I mean, we've done some really tiny deals before, and those are some of the most satisfying deals you can imagine.
Right. And I say, if you have money to lend and it's not actively working right now and it's sitting there, you're not lending.
That's right.
If you're not putting it to work or looking and finding and trying to say, I've got money in this industry, you're not looking, right? So it's not just going to come to you. You got to get out there.
Mhm.
Brad asked, have you ever had to deal with defaults?
Foreclosures?
Yep.
Yes, we've had to foreclose. Foreclosures suck. I'll just be straight up. Foreclosures are not fun. Um, and I can, that's one of the things as a borrower, we always tell our lenders, hey, you're going to be first lien holder position. You just foreclose and go get your money back. Well, foreclosure in reality is very different than that 99% of the time. Most of the time when you have to foreclose, you're not going to make your money back. And the way we always figured it, if we get our money back, we're very grateful and thankful. Fortunately, we have not had to foreclose a lot, and the times we've had to, we've just walked away with our money,
Mm-hmm.
and like I said, very thankful every time.
Yep.
But yeah, foreclosing is not fun.
And Steve, that's you hit a very key point that I tell a lot of the members of SVI is, don't look at each opportunity individually in the mindset of how you're going to grow your business, because it's a business. You're going to have a couple wins, a couple break evens, a couple losses, but at the end of the year, you look at how you ran your business. And if you're looking at a profitable business in real estate, making a profit, I think you're doing good.
Yeah.
And that's how you got to look at. So don't be scared to take certain risks, but make sure they're not the insane kind of risk based on desperation, trying to fit a square peg in a round hole, steering, things like that. You got to be very careful with that.
Yeah, and like you said, I mean, you're 100% right, because there's ups and downs in every business, no matter what, and we're always going to have losses, and it doesn't matter what the business is. We want our wins to outweigh our losses
Correct.
as much as possible, and then the losses that we have, learn from them, learn to change your systems, change processes, so those things don't happen again.
Okay. Miss Wanda Butler asks, what is the best way to get started being a private money lender?
Well, I think you kind of answered that. I mean, you got to get out there. You got to get out in front of people. You just got to let people know that you're out there to lend some money. Now, I'm gonna throw my little caveat in about that, because in one of my presentations I talk about this. When you throw yourself out there, a lot of people are going to come to you. So the most important part after that is knowing how to vet the deal and vet the borrower. That's the key.
And guess what? At SVI, we do have a private money lending platform for risk mitigation and vetting. And that's where you can learn how to do the vetting process, and then obviously begin to privately lend. But it's very important that you do understand the vetting process. You become an underwriter, right? You're there's a character process, there's a asset process, and then there's, what does your gut feeling tell you about this?
Always go with your gut. Always go with your gut feeling.
All right. Let's see here. Don Knowlton asks, how do you scale a lending business?
How do you scale it? Lend more.
Right. Absolutely. Leverage. You could leverage, take on some debt that you could, put to work. When you foreclose, do you take over the rehab, or do you just sell the asset as is?
Every individual is going to be different. It depends. And it depends on who you are as a lender to decide what you're going to do. Now, because I know how to rehab and I've got crews that work for us, the rehabs we've done, we've gone in, the foreclosures, we've gone in and rehabbed those properties and sold them on the retail market. You may not always be in that situation. Your numbers might not allow you to be in that situation.
Right.
Sometimes, or actually, I would say when you're foreclosing, the biggest thing you got to look at is, first thing I'm going to look at is, what's the best way we can cut our losses and get rid of this asset the fastest way possible. And so, cutting your losses as quick as possible is always the most important thing. No matter if you're the rehabber, it's a rental property, or whatever the situation is. And so we approach this exactly the same way. We're going to evaluate the deal. We're going to look at all the scenario of, okay, where's this at? How well do I know that area of town? How do, is that is that deal in the greater Houston area? Or is it on the other side of Texas?
Right.
Is it in another state? All those things will play a factor in your decision because if it's in another state, well, guess what? I'm not going to rehabbing in another state. I don't know anybody. I don't have crews. I don't have anything set up.
Mm-hmm.
How can we cut our losses the fastest way and mitigate our losses the best way possible?
All right. Well, Steve, we've come to the end of the webinar, and here's the Wealth Club information, guys. If you want to get to know them, feel free to take a snapshot of it. You can look them up also online. And we want to go ahead and thank some of our SVI partners and affiliates. Here you see a good group of industry partners. I know the Wealth Club uses a lot of them too, because that's about I like to say the guilt by association, right? It's good to ask for references, right? It's good to talk to people.
It is.
Know who your lending partners or your industry partners are. And guys, here's an invitation for those of you that are in the Houston area and you are a realtor. Tomorrow at Quest Trust Company at 17171 Park Row, we're holding a real estate realtor advantage training only for realtors, guys. It's understanding investing. And I go there and do a 3-hour real estate training course that, by the way, Steve, this right now is with attorneys for us to get the 3-hour CE credit course for that. So this is going to be
awesome.
amazing for realtors. And then Steve steps in at the beginning and talks about some more vital information that is good for realtors. And we do have industry partners such as Quest and the Wealth Club for this. So we really invite everybody to register to join or just show up, guys. It's at 10 a.m. We're going to provide snacks. It's 10 to 1. It's very informative. We're going to have some door prizes too. So just inviting everybody. Now that's the business side. So here's the fun side, guys. For those of you that live in Houston, guys, at Brew 30 Tap House in Cypress at this address this Sunday, September 8th at 2 p.m., come join us for a beer. We're going to have cornhole out there. It's a really nice tap house. It's got over 30 taps. I believe the weather's going to be great. Mm-hmm. And so it's going to be perfect for everybody to come out and get to meet us, join, let's not talk real estate. Let's just everybody get to know each other and have fun. So this is a All Point Bulletin broadcast. We really would like to get to know everybody that's joining us.
Oh yeah, come out and join us. I mean, we're gonna hey, we're gonna have a good time.
So yeah, we're gonna have a good time.
Why not come out and join us and have a good time with us?
And guys, you won't be. Gary, the owner, has an amazing taste for the breweries that he brings in there, guys. It's really, really good fun. And last but not least, if you want to know a little bit more about SVI and the one-on-ones that we do, feel free to go visit us at strataventures.com. And there's a web form there that you can fill out and schedule your one-on-ones. It's just for us to get to know you. And then also, if you would want to go ahead and like and subscribe, we're on these platforms of YouTube, Instagram, and Facebook, or send us a direct message at info@strataventures.com or 800-504-2909. Or you can also just scan the QR code that you see there or visit us at strataventures.com. So we went over, but it was great. Guys, thank you so much for joining us. Steve, as normal, it's great having you. And I will be seeing you tomorrow, my friend.
Definitely. And guys, thank you so much for joining tonight. And if you need anything, have any questions, feel free to reach out to me. I'd love to answer them.
All right. Good night, everybody. Enjoy your family.
Night.